The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. We're going to start the day like we usually do. This is a crop report day, so we'll make a little exception and do it the usual way so we don't confuse anyone, including the speaker, which is I. We have a situation now where we're making some longer-term patterns here in the DAX. As you can see from this 4-hour chart, it's completed several ABCD patterns, and we're still up near this high at 12,300 area. That should be a pretty good corrective zone if that's going to be the case, but we don't know for sure. Bringing this to your attention because it is very heavily traded across Europe. It's the S&P of Europe. It has a margin of 22,500 euros, so it's not for the cheap of heart, but 100 points in the DAX. If it goes from 12,300 to 12,200, that's $2,500. So you can see the volatility in this one exceeds the wildest imaginations of anything you might see with the S&P 500 for sure. Now we're back up near this 61% retracement in the S&P 500 that we pointed out yesterday. We'll bring it up to you. Well, let's start out with the Dow Jones E-mini because that's how I've got them lined up today. I wanted to be sure to try to get a couple of them in here to see what's going on. And you'll see here that we have a retracement up here. Another 100 points in the Dow Jones would take you to a 61% retracement of the high from the 16th of March. But that would only be a 382 retracement from the high that we made back on March the 1st, right after the congressional speech. So there's some still strong resistance. We're not seeing that, of course, in the Nasdaq. The Nasdaq has, been the big daddy rabbit on the block, and it continues to go higher. But the $64 question is somewhere in here. There's going to be a point where it does have some type of a reaction. It might not be in my lifetime, but we'll wait and see. Now, the next one we want to take a look at, of course, is the one that really is the true market, and that is the New York Stock Exchange Index. And if we look at this on a half-hour basis, you'll see that we are very, very close to a 61% retracement from the March high. That would be about 78% from the high that we made on March 15th, much like we did with the S&P. And as you can see, that big ABCD that went down on the 27th has yielded the same type of rally that we have between the 14th and the 16th. Both of these have lasted 4 days. So if this is correct, and we are in a bear market, we should be looking for a potential for a down close here on Friday because you are in a short-term downtrend. The only negative to this is the fact that this is the last 2 days of the month. If you remember, the last 3 days of the month and the first 2 trading days of the next month are usually positive just from inflows into mutual funds and hedge funds. But frankly, the way the beating up on all these mutual funds, I think it's more of an ETF game now than anything else because someone can buy an ETF for the S&P or the Dow or something and probably do better than if they had their stuff managed by somebody. Someone's asking, well, we have a big crop report today. I believe the crop report comes out at 10 o'clock Chicago time. It's either 10 or 11 o'clock Chicago time. It's right in the middle of the trading day. For years, they would give it after the close. But I don't know when it was. Not too recently ago, we went to times right during the market hours, and the reason for that is basically they wanted to clear the air and get it out of the way. That was pretty much that was pretty much the reason. And also it takes all of the worry out of what's going to happen on the opening the next day. With the expanded limits that we have in some of these patterns or in some of these markets today, that's not unusual. I would prefer them to do it this way, to do it right during market hours, because then you get a pretty good idea of what's going to happen. The problem with this is the same thing that happens when we have a non-farm payroll report, folks. What will happen is, and in fact, I will be doing this also, is you'll be watching, to see what the bids and offers are as the report is released. Now, they're looking for somewhere between around 89 million bushels in beans, and that's the key figure that my friend from Chicago told me to watch, because that's his business, is being in the farming business. He manages over 500 farms, and he does all their hedging for them. They do their own analysis. They do their own forecasts. In other words, his 500 farmers have sent in what they're going to plant, and it's a far different figure from what's being reported by the preliminary figures for the USDA. They're actually looking for a little bit more friendly support. I think, this is my opinion, of course, that these patterns do look relatively strong. I mean, they don't look like, they're not too far from new lows, and they could make that easily today. But even if they do that, there's expansion numbers that are just sitting right below the market that are tremendous support in some of these things that will yield yield some wildness, but it will be crazy. What I'll try to do, well, you guys have Mr. Z in the room, plus a few others that really follow this stuff pretty good, so they can post in the room whether the report was bullish or bearish, but you're going to see that on the charts. If you see corn up 10 or down 10 or 15, you'll know that the report was friendly. If you see beans up 20 or up 10 and then down 20 or 30, that's it. Now, if you see beans down 60, which would be equivalent of two limits, then that's a game changer, because that's going to put beans down near the $9 level. And to me, that would be clearance time, but we have to look at a longer-term chart to see if there's anything outlier. That would be an outlier event if it can do that, folks, because that's a huge move, 60 cents. It sometimes takes a month to get a 60-cent move in beans, but it'll be crazy. In order of importance, the one that looks the most, if someone had to put a gun to your head, and believe me, they don't have to do that. The one that looks the most interesting to me, and I'll put this up. I'm not buying it here. I'm watching it here. I want to wait till after the report comes out, then we'll take a look at it. But if you'll see here, this December corn chart, which is new crop corn. This is the corn that will be harvested in October, November, December. And as you can see, we have several ABCD formations coming in at the 370 level. And that's down about 12 cents. That's a pretty big drop. As you can see, it's taken well over a month to drop 20 cents from 405 down to 380 to the 380 number. That's 25 cents. It's taken a whole month to do that. So most of the selling, just by looking at this chart, would tell me, yeah, most of the selling would be primarily out of the market, because everybody's expecting a pretty bearish report. Now, the $64 question is, will it be? 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we're going to go to the IWM for just a second here, but first I wanted to reiterate the positioning on the report today for the corn. I believe it comes out at 10 a.m. Chicago time. It's either 10 or 11. I will double check that at the break and find out exactly when the report is. They've changed it over the years, but I know it comes in about an hour or so after the opening. It gives them 2 hours or 2.5 hours to manipulate what they think these figures are going to mean. And believe me, these are very important figures. Even though these are total estimates, folks, these numbers are not going to be final by any stretch of the imagination, because we have another month to plant both corn and 2 months to plant beans. So, things can really go haywire. If they plant too much corn, that means beans will be bullish. If they plant too much beans, it means corn will be bullish. So we'll see if what's going to happen. But don't go into a position into the report. After the report, you have an idea of where the ranges are going to be, so you can put your stops in. But until that time, you can't do that. If you remember last year at this time, we were doing the same thing. We were looking at corn, and it went down and made new lows for about a minute and a half, and then turned and rallied for well over 3 months. It rallied over all of April, May, June, and it didn't top until the middle of July. So whether it does the same thing or not this year, there's strong seasonality, folks, here for several reasons. One is the equinox. We just had the spring equinox, which is the growing season. That's one history thing, that the markets will bottom near that time. And then, of course, the second one is the normal seasonal that is positive for this. So the report comes out at noon, New York time. Thank you, Mr. Z. That's 11 o'clock Chicago time, and that will be 9 a.m. on West Coast time. So that'll be in not too far. We're not too far away. Wow, that's pretty good. So we'll see what it's going to do. I will do my best to come into the room and give you my assessment, but it'll also be the assessment of the gentleman that was here this past week that handles all these farms and all the hedging and stuff. He's got some incredible option strategies that he's going to be sharing with us on the webinar that we're going to have on Tuesday with Rich Anderson, going over the U.S. Day Report in depth with option strategies and flat-out strategies for where we think prices are going to be going, through the rest of the months. And believe me, this is just the beginning, folks. There's always a scare or two with the weather, and the way the weather is nowadays, with it 75 in December in Philadelphia and 45 in Tucson. These are really wild swings that we're having in weather, which will affect some of these markets also. So we'll be doing that. Now, let's just get back to this IWM for a second. As you can see here, we are in a lower top situation. We had a lower top on March 1st when we had the big gap up. We had another lower high on March the 15th. We then completed the ABCD pattern to the downside that stopped exactly where it should have. We took out the lows of January by just a little bit, and now we're in the section of where we are right now. Now, someone's asked me a question about global warming. I will say this: I know as much about global warming as Al Gore does. That should be the end of that situation. But that's something that they've been debating for well over 100 years. If you go back and look at some of the things that were sent at the turn of the century, about they only had 50 years to go. They're not, what they say and what they do are two different things. So I don't understand global warming. We just had a very nice guest in from Alaska, and he was telling us that the reports that you're hearing about these glaciers melting up there is far from true. In fact, they've been adding ice for the past few years. So we'll see. We got a question here about the gold market. The gold market is, I still think we're in a situation where we're trying to make some type of a pretty significant top here in the gold. I know I have it here. I just hope that I can pull it up. I'm going to have to do it at the break. Shut the front door and raise the rent. I thought I had this one ready to go, but I don't. Doggone it. All right, we'll not worry about that one too much. I'll get the gold at the next break. But to me, the real situation that's happening in the gold is it gives you an idea of what's happening to platinum, folks. See, platinum has only been able to make a 38% retracement when gold's been able to make almost a double top, and silver made a 78% retracement. But platinum, and I know platinum is a much smaller market, but it still follows gold quite a bit, and it's been down 6 days in a row after hitting the 382 retracement. So that, to me, is not a sign for a lot of bullishness, in the gold market. Now, we went down last night to the 1240 level, which was another small ABCD pattern. Let's just get this up so you'll be able to see it here. Just give me 1 second, and it'll be coming into the room in 1, 2, 3. Here we go, 4. Come on, there we go. Here we come. Here it comes, the gold chart, and we'll take a look at this. You'll see that it made another ABCD to the downside. You'll notice that the swings are pretty nice on the rallies back. They've been somewhere between 8 and 11, and now we're again at 8. So we just made another retracement right up against that trend line at 1249. Now, if we can go through the 1249 to get up to around 1257, then that could be, a potential breakout. But right now, this is still in a downtrend. It doesn't look any different than anything else. So we'll see what's going on. That's the best chart I can get on gold at the moment right now, Pedro. So I'll try to get another one out for the next one. But the key that I'm looking at is the fact that we have, the situation in the platinum market that is very unusual. The other thing that's unusual is the fact that we had oh dear, I lost my train of thought. Well, I'll remember that in a minute. Something else happened in gold that was interesting. No, Can't remember. But anyway, it still hasn't taken out the 1265. If we take out the 1265, that's going to mean a great deal. But I still think we got a chance to pull down a little lower in the gold. My ideal time to look at the gold is about $40 from where we are right now, $48. That comes in at the 40. Let's try it again. That comes in at the 1222 level. That's the area that I'm watching. That's got some pretty interesting, things to look at. But right now, this level of 1249 that we made here in the last half an hour tells me that, that is a natural sloping downtrend line. The 618 comes in around 12, right around exactly between 1249 and 1249 and a half. And we're trading at 1247.80. The high's been 1248.80. So maybe that's it. Maybe it's not. But with that long bar, if you look at this on a half-hour chart, we've only seen one other bar of this length, and that's when it made the bottom, several days ago. So this could be an interesting spot here to look at gold. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to just try to clarify what I was talking about with the platinum. I've posted the platinum chart here, the daily chart going back from last January of 2015. As you can see, we made the nice bottom at the 78% level back in December. That's when we had the 3 drive to a bottom in the gold. We were also making a 3 drive to a bottom in platinum and silver. Then we had the 50% correction. Then we had the 61% retracement, and then a rally of the last 9 days only took it to the 382 retracement. Now this is when gold went up and made the high at 1261, where the old high had been 1265. So this is showing you that it is far weaker than both the gold and the silver. Now silver looks quite a bit better. It has a much firmer tone to it, and it has had virtually no selling ever since this bottom came in back on the 15th. So silver looks like it's the strongest. In fact, it's above the 78% retracement this morning. We're trading at 18.23, so that's about 2 cents above the 78% warning. So we'll watch to see, see what's going on. Okay, let's see. All right, I don't know about those things. Anyway, we'll get back to some of these others. But anyway, that's my feeling on the gold and the silver. Also, if we looked at the XAU along with the which is the gold miner index, and plotted it over gold, it's saying that they're not going to get any help from the gold miners in these longs. They're just not moving with the market. They're moving more or less with the stock market and not with the gold market. So we'll see. The main thing, yes, Bill Meridian is short gold, and he believes that we're going to be going down quite a bit to the tune of about $150 to $200. So whether that's good, remember that Bill is wrong just like everybody else. I mean, the one thing you have to give Bill credit for, he was looking for a very bad February, if you remember, and on February the 6th, because I wrote this down and I sent it out to you guys, that Bill had exited all of his short positions on February 6th in the stock market and was standing aside. He didn't go long, but he stood aside all during February 6th. Since February 6th, he has not put a position on. Now remember, for the long-term timing, he was the timer of the year from the Timer Digest. He beat about 300 other people, so he does pretty good with his long-term forecast. But he certainly knew when to, like Marshall says, he knew when to say uncle. And remember, uncle has lots of aunts and cousins to make mistakes with. So the first mistake teaches, the second mistake kills. So there's nothing wrong with making the first mistake. That was, being short the market. And the second mistake was if you'd have stayed short, that's the one that would kill you. So if you take some pot shots at it, in other words, $500 here, $500 here, sure, you're going to have some losses along the way, but you're going to usually come out ahead. One of my favorite quotes is from Paul Tudor Jones. And he said that he was being interviewed in the Wall Street Journal. This is a journal article that you can pull up if you want to. But he was saying to the reporter was saying to Jones, he said, "Boy, it must be exciting to meet Paul Tudor Jones, who called the exact bottom in the Treasury bond market." And Jones said, "Well, that's only part of the report." And he says, "What's that?" He said, "Your article should say Paul Tudor Jones successfully picked the exact bottom of the Treasury bond market after missing it the previous 6 times. So that's the key here, is you got to never give up. Keep looking to what you believe in and what you're seeing, and then you'll be in pretty good shape. Someone's asked a question about what are some of my memories of these reports, planning intentions, and other reports that we've had in the past. Well, the one that was most memorable, I've told several times, that was the one from 1976. In January of 76, we had a report that came out that was, I've already told this one, but the one of my most memorable was back in 1972. This was at the beginning, we're about the middle of the Russian grain robbery, but something had happened in the market that affected everything, but no one realized it until after it was open. It was the bean report the beans had been coming down, but very, very quietly, much like they're doing now. They were trading in an area of about 350 to 375 a bushel, and the report was bearish. And the guy on the Squawk Box came out and he said, it's going to be pretty bearish in here. The limit was 20 cents down, by the way, which was $1,000. And he said, looks like we're going to be 12 to 15 cents down in old crop, and new crop we're going to be down about 7 to 10. About 20 minutes before the market opened, he came back on and he said, well, it looks like there's a little buying coming in. He says we're going to be down, but probably only 5 to 7 in the old crop. And new crop has actually got some support coming in. It's actually a little bit higher on the day. About 2 minutes before the market opened, he came on and he was quivering in his voice, and he says, they're going to open limit up. They're going to open limit up. He kept screaming that, and we were at Conti, and there were like 35 people in the room, and he'd lost it. And it's a guy we listen to every day, and he kept screaming, they're going to open limit up. Well, what had happened is that they had actually, in the foreign exchange market, the Federal Reserve had taken off all support for the U.S. dollar. And that meant that the U.S. dollar was dropping a lot. This is when the Deutschmark was trading at 25. Now, I don't know what that would be related to in the euro these days, but when the euro came on, I believe the Deutschmark was trading at 58. So you don't stand near the windows when you have a crop report, Terry. That's the main thing. Just stay away from the windows, especially on the 20th floor. We never had any of that happen all during the time I was there. Anyway, they dropped the support on the dollar, and so the Deutschmark went crazy. And this is when, if you'd have bought a Mercedes in 1972 or 73 or 74, the mark was going up so much that you were getting a discount on the car every year that you owned it. And that's what, why Mercedes, well, this is my opinion, why Mercedes still are, valuable to this day, is because of their resale value that's held up that was a cause of that. So who knows? But anyway, that was one of them. There were several others along the way that I'll share with you, but that was one of the more memorable ones that complained. I believe we were up 5 limits in a row before they changed the limits, and beans were on their way to I believe 1290 or something. It was quite a bit of a move. It was related to weather along with the devaluation of the dollar. That's why we have to keep an eye on this dollar index, folks, is because it's got a really strong correlation to some of these things that we're seeing, in some of these other markets. Now, if you'll remember yesterday, we were talking about the euro. I think we were. In fact, I'm sure we were, and I wanted to. Oh, my goodness, Larry, where did you put it? Oh, dear. Now, here we go. I think this is it. Nope, this is another one of the growing ones. We don't have to worry about that. I'm going to have to put it up in just a little bit. Okay, I'll bring it up right after the break, and then we want to cover a little bit of price line.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I've posted the chart of Priceline, and as you know, we have one of our listeners, Priceline Charlie from La Paz, Mexico, calls in occasionally, and he was looking for a top up in this area of 795. The high so far has been 796. We're down a few dollars from that. It closed at the 789 level. In the platinum, so that's if it gets above the 796, we have no idea where it's going to go. But the fact that it stopped there for 3 days in a row is rather amazing. We have one other fellow in the Tiger community that is big on this stock, and I just put a short position on. That is Broadway Bob. So good luck to both you gentlemen on your positions, but if it gets above 1796, make sure you put a little stop in there just as a little saver. Folks, you're trading, if you are, and I certainly don't recommend this, a $1,800 stock. 3% of that is a huge amount of money. So if you're going to trade it for $10, you're talking about 1/10 of 1%. So you better be right. And we'll follow it along to see if it's going to continue. All right, let's take a quick look here. In fact, we'll take more than a quick look here at the euro. If you give me a second here, we can pull it up here so we can see it. There we go. You can see we had this move from the 9th of March, and we rallied up into the 27th, which was our full moon. Let's try that again, Larry. That was a new moon. We made a 3-drive pattern. Here again, you see we made a 1.618 expansion. That's the one that matched up with the daily. That also matched up with the dollar index at the 99 level. We've now rallied a little bit on the dollar index, but right now, folks, we are sitting at the proverbial moment of truth here in the euro. As you can see, we've made a 1.618 expansion down here at the 116.80. We're making a 1.27 expansion, 116.70, and we're making a 61% retracement that we've already completed and is held there for several hours at the 106.70 level. So this has really got a positive bottoming formation, much like we had back on March the 15th. But if we go below 106.50, that's 40 points from where we are right now, I would certainly consider this a failure pattern because it would be breaking two major expansion ratios, 1.618 and 1.27, and a major contraction ratio of 0.618. So it would be breaking down below all of those, and to me, that puts it in the category of a big unknown. And you can't really do too much with this. In fact, you can see this a little clearer if we'll bring up a weekly chart here on the euro just to show you how weak this rally has been in the euro. Remember, this is a weekly chart now, and if you look in the far right-hand corner there, folks, you'll see where we're trading at 106.90. That just completed that ABCD up at the 109 level. That's nothing more than a selling opportunity, because every time you have an ABC in these markets, in a down market, if you sell it, you'll probably, make money. So this tells you that the resistance that we have at this 109 is, very, very important. And what we're looking at now is a market that's trying to find support here at this 106.70, but failure to do that tells you that the market is going to be pulling it to the downside. So this is a pretty easy one to look at from a technical basis. Now, it has nothing to do with the fundamentals. I don't know what's going on there, but the technicals say that we have a great deal of support here at this 106.70, 106.80. We haven't moved very much over the last several hours, so we've been here for at least 3 or 4 hours, more than that, about 7 hours, including the night session in New York, which is early London, and we're still trading at 106.88, and the low has been 106.70. So we're at 17 pips above the price, but that's not very much. The key figure to look at, from my opinion on this, is if we go below the 106.50 level, that's be 40 points off this intermediate high that we made at 106.90, then I would say, yeah, that means you're most probably getting ready to head down to a much lower level. But right now, it's just sitting there, on support. I mean, it's been here since, it's been here for half a day. It's been here for 14 hours at this same level. So whether this is going to hold or not, we don't know, but maybe it'll be the opening of the New York markets that'll make it move. We'll have to wait and see. But so far, even that hasn't happened very much. But we'll watch it as we go. But it's very important to look at that. Now, the gold, let's get back to the gold for just a second. I've got an idea here that for those of you that like to enter the gold market, so give me a second, and I will bring this up. It's a way of, I'll just bring it up, and we'll just take a look at it here. These are some of these figures that I put up here. That's as good. This is what I want to do. Okay, give me a second here. And if the gold, watch the gold here, folks, because this could be a really strong place to watch this gold at the 12, down about $1 from where we are right now. We're at 12.46, about $1.50, 12.46.30. Keep an eye on the gold at that point. That would be an interesting one to watch. It's has to do with the 20-month line that's in there on a little bit shorter time frame. But all we've done so far is that 12.48.80 is nothing more than a continuation of that downtrend line that we posted early this morning in the gold. So if it can get above the 12.50 level, that'll mean that we are probably going to go a great deal higher. And we should have some minor support, and I repeat this, minor support at 12.46.40. So I would sort of watch that one just from a technical standpoint to see how some of these things line up. That's what I do, is I put my limit minder in to tell me if this is going to be a bottom or where I think it's going to be a bottom in the euro or gold at any particular time. It tells me if this is a place where we might want to be looking, for an entry. So that's neither here nor there. Now, I wanted to cover one other one in the foreign exchange. Wow, the time goes so fast when you're having fun. Shut the front door and raise the rent. Let's just look at another one that has some bearish implications here. And that is the, only take me a second. I've got to do something here. Bear with me here. There we go. Now it only takes me a millisecond to get back into this. And then we'll be able to see it. I hope, I think this is where it is. Yes. All right. Here we go. We'll put this up, and so you can take a look at it. This is the Japanese yen versus the the U.S. dollar. As you can see, we're having a little bit of a rally now, a little 3-day rally. This is about all we should get, up around that 112 and change level. That's about all we should get for a rally, and now we should start continuing down the same way. Now, whether that'll have an effect on the euro or not, we don't know, because the euro is, certainly a lot different. The euro, if you remember, coming in this week, we had a potential here for this ABCD pattern to complete, and it did it almost in perfect time. If you'll put this up, you'll see the daily chart here. The number of days up in the AB, the leg, were 23. The number of legs up in the CD leg was 23. We took out point B by just a little bit, completed the ABCD pattern up at that 109 and change level, and from there we've been heading down. So that's what we're looking at. Some amazing things happening. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm back. If you'll give me a second, the beeper is alerting me that something is happening in paradise. So let me see what it happens to be, and then I'll be. Oh, the gold just hit that level that we were looking at, 1246.70. So watch that closely, just for educational purposes. Remember that we do have a crop report today in the grains. It's going to be a doozy, as they say in the trade. So keep an eye on that. As far as the S&P. We do have some resistance at the 23.70 level. That's the 78.6 level. We also have some support at 23.48. This is a Friday in an up week. So the chances are we're probably, if anything, there is a slight bias to the upside for the reasons that it's the last days of the month. And then, of course, the first 2 days of the month are also slightly bearish. But those are statistical things, that we're looking at as we watch some of these markets unfold. But the big news today for those of us that look at futures, of course, is the commodity market. With the grains. It's the planning intention report, and we'll report on that extensively in our special webinar on Tuesday with Rich Anderson and Cy Monley from Sylvius Financial. We're going to give some ideas on option strategy, long-term option strategies, and gee, these guys know how to use leverage like I was blown away. I mean, it's not easy to get blown away, but it certainly did it to watch how they use leverage with this to risk just a very, very small amount to make a great deal of money. Now, the odds of winning on some of these is rather unique, but as far as risk reward, it's really, really exciting to watch how they do some of these strategies. Okay, remember, folks, that we still have a gap here in the Dow Jones at 20,000. That's a really large gap, and I think that it's going to take a little while before they before it fills it. We're at 20,700 right now, so we're not too far away. We've got the Dow down about 42 points right now. The S&P is pretty much unchanged.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the